So hello everyone, we are back with our episode 2 on education loans, and today we are going to discuss about the loan without any property collateral, or also called as the unsecured education loan for studying abroad. So we have Aman with us, who's an expert on education loans from GyanDhan. So hey Aman.
Hi, Virendra. Thank you for inviting me again. Happy to be here.
Great, Aman. So let's start with Aman. What is an unsecured loan and how is it different from secured or a dollar loan?
Right. So, as I mentioned in the last episode, right, an unsecured loan is a loan without any tangible collateral. So, for the students who don't have any collateral, tangible collateral such as property, and they want to go abroad, then obviously the other option is unsecured loan, where the loan is being given to you basis your profile and your co-applicant's profile, and that is the unsecured loan. That there is no tangible property; it is just basis your profile you are getting the loan.
Great. So, which means if I'm not giving any property or anything, how is the bank giving me the loan?
Right. So see, in education loan, the bank is actually banking on the fact that you are going for a good education and you will be able to get a job, and from that job you will earn and you will repay the money, right? And that is why the unsecured loan is not available to all the students, all the colleges, all the universities. There are actually we work with 15 plus lenders at GyanDhan, and combined speaking, there are 700 plus universities where you can get an unsecured loan. So which is a lot of universities if you're getting unsecured loan for. But let's say if you're going to any university which is not in this specific list, then you will not be able to get an unsecured loan. In fact, that is in a very crude way, the bank is telling you that we don't trust you enough, or we don't trust your plan of education from that university enough, and that's why we are not actually willing to take risk to give you an unsecured. Maybe at that point in time students should evaluate that, okay, hey, am I going to the right university or not? So there are two parts to the unsecured loan. One, banks check the ability to pay, whether the student will have the ability to pay in the future, and that is directly proportional to the university you are applying to and the
Schools.
understanding of the lender, right? The second is willingness to pay. So now, what is willingness to pay? That is being checked with the credit score, CIBIL score. So in unsecured loan, they are checking your college course for ability to pay, and for willingness to pay, they will check the CIBIL score of your and your co-applicant. So father, mother, whoever is coming as a co-applicant in the structure. Now,
What's the role of co-applicant in this role? How important is
see,
it?
specific to Indian lenders, they want that on the loan structure, there should be somebody who from the family should be there who is in India. So that just in case if ever comes the scenario where the student is not paying, then they have somebody to catch. It's a high ticket size loan. So Indian lenders, they usually say that, okay, hey, we want somebody from India who is going to be in India as the co-applicant, so that if the student doesn't pay, then the liability to pay will comes to the co-applicant, and if the co-applicant also doesn't pay, then the bank can actually do the legal proceeding against the co-applicant. So that is the role of the co-applicant. Other thing that where the co-applicant role comes to the picture is these unsecured loans, usually from the Indian lenders, this comes with a partial moratorium period. What does that mean is that during the study period, you are supposed to pay a partial interest at least. So let's say they will give you some amount, 5,000 rupees per month or 7,000 rupees per month, that you need to pay as interest. The reason that they ask to do so is because they want to be in touch with the student. They don't want that, okay, hey, I give a loan today and then I forget it for 3 years. They want that there should be some repayment every month, so that if anything happens, then they get to know upfront. And mostly because the students they are going to study, they don't have the capacity to pay, and that is where they check the eligibility of the co-applicant, whether it's a very small amount, 20,000, 30,000 at times, but then they check that, okay, hey, can the co-applicant pay this amount or not? So that is the sort of role of the co-applicant in the unsecured.
Co-applicant is one of the most important angle in an unsecured loan, right?
Unsecured loan from the Indian lenders. There is another loan that I mentioned in the last episode, which was a dollar loan or the international loan. This third kind of loan that is being given by international lenders. Maybe we can talk more about it later. But there the co-applicant role is a little bit less. But unsecured loan from the Indian lenders, which is most of the students applying for, a co-applicant is must.
So which are the common companies giving unsecured loan?
See, so a lot of banks are giving unsecured loans these days. For example, IDFC First Bank, ICICI Bank, Axis Bank. In fact, a lot of the biggest news of 2024, I would say, is State Bank of India is starting unsecured loan. Uh,
Oh,
I have been in this industry for 9 years now, and I never imagined that SBI would come up with such a step because they have been very rigid around this specific thing. But just last month they launched their unsecured loan product. So now SBI also is giving unsecured loan. Obviously there is a list and all of that, but up to 50 lakh rupees. UBI
okay.
is giving unsecured loan. So public sector banks, private banks, everyone is coming up with the very student specific loan products, unsecured specifically. Like for example, ICICI Bank has a loan product where they give loan basis the work experience. So if you have 36 months of work experience, good salary in India before you are going abroad, then they will actually let go of the co-applicants. They will still want the co-applicant, but they will not be very adamant on the fact that co-applicant salary should be this much and that.
Good innovation by the banks in this
Yeah,
space.
yeah. In fact, education loan as an industry means uh, a lot of things. Like for example, Niyo. Niyo has been doing a lot of things for students, giving discounts on CRA and all of that at times. So people are actually thinking about students at the end of the day. That okay, how can I enable the student to go abroad in the easier way? And a lot of lenders are doing that, and probably that is the reason why the number of students going abroad is skyrocketing. Back in 2014-15, 2 lakh students used to go abroad. Now the numbers are coming around 9 lakh students going abroad,
Right.
which is
So
projected
finance
to
is becoming
go
accessible for them.
right, which is projected to go as high as 20 lakh numbers in five
Right.
six years timeline.
We are in the good industry.
So, so all of this is happening because of the innovation that is happening in the industry.
Let's say this is a good picture if I am in those good students with a good score, good college, and a good co-applicant or good work ex, I can still get an unsecured loan if I don't have a property.
Right.
But as you said, around 60% students are those who are in their final year and just after their undergrad, they are applying for a master's.
Right.
So I have two questions here. First, for these students who are just trying for a master's, how does the co-applicant thing work? Like it's totally dependent on the co-applicant then. But
Then
how
it's
does it
yeah.
work if the co-applicant is not having a proper ITR? If they are
See,
salaried, it would be easy. But what if they have the shop? The same scenario. How would they do? How does these loans work for undergrad student? Like after school, undergrad is a growing segment. A lot of students are going after their 12th for their undergraduate degrees as well. So how does unsecured loan work in both cases?
Viren, so there is a segment specifically where you are, if you are not going to the top 700 universities that I mentioned, you don't have a collateral, and your co-applicant also is not earning well or don't have the proofs such as ITR, then there is no availability. In fact, earlier today, there is no availability of a loan product for them. Earlier today, for a article we were writing and we were trying to figure out this number. So latest I noticed in the last 12 months, even at GyanDhan level, 34% of the students were not eligible for an education, which is quite a high number. All of these students had admit they wanted to go abroad. They have done the hard part of getting the admit, but after that there was no loan product available for them. Now, for a few of them, I feel that a lot of innovation, and that is what we are doing at GyanDhan, that there are few segments which banks right now don't understand. For example, if somebody is going for, let's say, filming industry, they want to do something, a course related films or filmmaking, designing and all of that, arts, specifically arts related, the current lenders and the banks, they are actually just after STEM, science, technology, engineering, management. For any other kind of course, they right now they don't have the understanding. It's not like that all the arts related fields don't have jobs out there. It's just that the understanding is not there in the current ecosystem, and that's why uh, loans for them is not available. And that is what needs to be solved for that. Okay, having that understanding of all the segments so that the loans can happen. The other segment where the loans are not available is a good thing. I will tell you why, right? If let's say tomorrow bank starts giving loan to everybody, to even to the student who's going to a low rank university where the job prospect is not there, then essentially the lender or the system is ruining the life of that student, because he or she will go to Canada or UK or anywhere in the world, going to a low rank university and is not able to secure a job with a debt of 40-50 lakh rupees. So that's a crime, and that's a financial responsibility for players like us, that one job is to give the loans and money to the deserving student, but at the same time don't give money to the people who actually this can become a burden for them in life. So that is also a responsibility for the lender at the end of the day. So yeah, more I feel that there can be 10-15% more students who should get loan as of today, depending on what we see at GyanDhan. And we have been actually developing loan products. For example, let's say people going for pilot engineering or pilot related courses out there. I mean, it's quite a fascinating segment where people are going, getting jobs and all of that. Even after that, unsecured loans are not available for them. So these are the segments one need to be looking at the end of the day, where employability is there, but the unsecured loan is not there. To your second question around the undergrad. Now, the problem with the banks is that banks want money to be repaid quicker. Now, what happens in unsecured loans is that when you are most of the students, when you go for unsecured loan, sorry, for undergrad, post that a lot of them go for masters as well. And there is not enough data available at this point in time that people who just go for undergrad, will they be able to get the job just basis on the undergrad basis. So that's why the bank runs away from giving unsecured loan for undergrad, and the money needed is also quite high, right? Because it's 4-year tuition fee, 4-year living expenses usually comes out to be 70 lakh to 1 crore rupees or upward. Even unsecured loans are just available majority 40-45 lakh rupees, even for masters where the job prospects are well defined. So if you're going for undergrad, so then the parent should have property. The undergrad is one segment where I can still say is only for the people, unfortunately, at this point in time, who are affluent, who have money, who comes from the family with money.
So
Those are the only students who are going for
no
undergrad.
matter what university, you won't get an unsecured loan for undergrad.
See, getting 20 lakh, 25 lakh rupees is easier. There you will get it because they will underwrite it as a personal loan. But that's the limit of it. If you need more than that, then you need to have uh, secured property or something. There are few exceptions, as I mentioned, that a lot of lenders are trying. So, for example, a couple of banks have a list of 20-30 universities where even for undergrad they are giving up to 40-50 lakh rupees. But that is just limiting to 20-30 universities. That's it.
Okay, great. So undergrad, I understood. Now about these students whose families, for no fault of theirs, if the family is not, maybe the family is doing well,
Mhm.
they have rental income, they have shop and everything. So the only path left to them is before 2 to 3 years. Like the question is, how many years of ITR is required to get the loan?
At least two, and they should be filed at least 6 months apart.
Right. So at least 2 year prior to going abroad, their parents should actually start filing proper taxes
Right.
and filing an ITR so that a loan can be given to them, right?
Yeah. In fact, we run these campaigns. We go to a lot of colleges and talk to second, third year students and just tell them this, that okay, hey, if you are planning to study abroad in future, just talk to your parents if they are filing the ITR or not, right? What happens is that student is thinking they are not telling to the parents. Maybe they are planning to tell in the fourth year or so. Doesn't give enough time to the parents, right? So a lot of, in fact, when we started GyanDhan in 2016-17, we went to 150 plus engineering colleges in couple of years. Just talking about this one specific fact, because back then though it was even more prudent that you should have the ITR. Even today we do so. We go and tell second year, third year students that okay, hey, if you're planning to study abroad, have this difficult conversation with your father or mother that are you filing the ITR or not. Or the another example for the parents specifically is if you have inherited properties from your father, grandfather, or grandfathers. So what has happened is a lot of new documents have come over the period of time. Or at times in inheritance, the documents get lost here or there. So in fact, we ask them and to check that, give them a pre-document checklist basis the area. They just ask your parents that if they are planning to apply for a loan with property, if they have these documents handy or not. If not, then they will have enough time to get to apply for them.
So let's say if I'm applying for a loan of 25 lakh rupees, what should be the salary of my co-applicant?
So if for secured loan, as long as
I'm
the
thinking
value,
about
it doesn't
unsecured.
matter, right? For unsecured loan, to apply for a 20 lakh rupee loan, the income should be somewhere around 45,000 rupees per month for a 25 lakh rupee loan. But if you're going to a very good college, then the income doesn't matter. Even just 30,000 per month is also fine. ITR is there is also fine.
If my parent is just having a 6 lakh rupees yearly package,
Yeah.
will it entirely be considered as, or you deduct some basic rent and all and then
No,
you,
no, nothing is deducted. It will
there
be.
is a fact called as the exposable income. How
So
does that?
see, all of that is internal. So what happens is usually internally bank assumes that you can only uh, pay up to 65 to 70% of your salary as EMI,
Right.
and they internally assume that the 30% of the salary will be needed for your basic, food and shelter and all of that. So let's say while they are calculating, let's say 25 lakh rupees loan you are asking. So they will say that, okay, hey, in unsecured loan, because the EMI of 25 lakh rupees will come quite high when you repay. It will come around 80,000 or so. But
Right.
then they will assume that this 80,000 will be paid by the student in the future. Right now, I just need the interest. Then the interest will come around 25,000 rupees per month if you are getting it at 12%, just to keep it simple. So now to pay to 25,000, they will divide it by 70% and they will come at a salary of 40 to 43,000. So then they are saying that if you're earning 40 to 43,000, then you can pay 25,000 rupees as the EMI.
Okay.
Because rest 13, 14, 15,000 rupees you will need for your own shelter and everything, food and everything. So that's
So
internal.
let's say one of my parents' salary is not being enough. Can I add more than one
Yes,
co-applicant?
yes, you can. Your
Who can
father,
be the
mother.
co-applicant?
In unsecured loan, friends cannot be the co-applicant. Usually, it is supposed to be the blood relative. Ideally, father, mother, brother, sister, spouse. If not, they will consider second. Let's say if your father or mother has less salary, or the immediate family member have less salary, then they will consider your distant family member. Let's say 1 degree of distance. For example, your paternal father, your Mosi, Baba, cousin brother, cousin sister. So all of that can be considered as a second co-applicant. They cannot be considered as the primary co-applicant. Means bank will not be giving you money just because your cousins earns well. They will give you money when your father earns something, and on the top of that, cousin adds up to the profile. So then the cousin becomes the second co-applicant in that case.
A very common case is a lot of people with a lot of people is the father is retired and has a
Yeah.
pension. So will they consider pension as an income?
They do, but they have an upper age limit. So, see, somebody, let's say the life expectancy in India, right? I'm actually not aware at this point in time, but it's somewhere around 70, 75 or something, right? So let's say if you're already past that age, so then giving, because these loans are 10, 20, 15 years in length. So taking exposure on somebody who is already 75, bank don't want that, because bank knows that this person might not be there till the loan ends, which will be, this person will be of 90 by the time loan ends. So usually if the parent is having pension but they are 65, 66 age, till that it is okay. Even up to 68, 69 also it is fine. Means we have to push in all of that, but it is fine. Above 70 it becomes a little bit difficult, because then that concerns around how much life has left is there.
Great. So net and how much time does an unsecured loan take to process?
Unsecured loans are very fast. So we usually, once you submit the complete documents, we call it file logged in. We'll give you decision in 1 working days from the NBFCs and 2 to 3 working days from the banks. So
Great.
because nothing to be checked, right? It is just the document. In fact, we are working on some products where if we can give the decision in few hours. We few days back we organized these loan melas in many cities where we gave them instant within couple of hours. You came, you submit the document, and we gave them the instant loan offers from the banks. So unsecured loans, it is completely depending on the data, right? It is just the processing the data, and usually what happens is a lot of documents are not standard. So we are working towards standardizing them so that the system can read those documents and can give the result or the output, because all of these are logics. Then it's not like that today I am feeling that this person can get a loan or tomorrow this person cannot get a loan. All of this driven by formulas. So everything can be automated. I can foresee that 2 3 years down the line you will get your abroad education loan instantly. Like you apply, at the output you will get approved, rejected, which we do for our a lot of upscaling loans that we do at GyanDhan, where if you are applying for a 1 lakh rupee loan for great learning or upgrad or an academy, you get that 1 lakh rupees instantly approved because it is driven by logic. Similarly, it is just that the higher the amount, a little bit more documents are needed. That's it. But the base of this is actually the same.
Great. So now last part in unsecured loan, Aman, about the processing fees.
Yeah.
And one more part, what percentage of my entire spends would a loan cover? Like if my entire cost of education, including living cost and tuition fee, is 50 lakh rupees, will a unsecured loan cover entire 50 lakh, or I'll also have to need some money?
See, so usually everything is covered, but you have to tell upfront. So tuition fee plus living expenses, travel expenses, even laptops and everything is covered. It's just that you have to tell upfront. It cannot be that you have applied for 30 lakh rupees as tuition fee and tomorrow you are coming that I need 2 lakh rupees for flight. That should not happen. So
Okay.
upfront you say that I need 30 lakh rupees, out of which 25 lakh rupees is my tuition fee, 3 lakh rupees is for my travel, 2 lakh rupees is for my whatever. You can mention that, right? So everything is covered under the education.
Okay, can
Sorry,
you
I forgot you the other question.
and for a loan of 25 lakh rupees, what is the processing fees I have to pay?
Right. So processing fee, it depends on which kind of loan you are applying for. So with the banks, like few banks like Axis Bank, they have a fixed processing fee of 7,500 rupees. SBI is a fixed processing fee of 10,000 rupees.
Oh, nice.
Uh, but whereas ICICI Bank, IDFC First Bank, and all of these have percentage of loan. So you have to pay 1% of the loan amount as the processing fee. So if you're applying for 25 lakh rupees, then 25,000 rupees plus GST, which comes around 33,000 rupees will be the processing fee.
And
Now,
what else other than processing fees I have to pay? Anything around insurance or something? I
right.
heard.
So a lot of these lenders, so just to finish the processing fee point, a lot of these NBFCs charge up to 2% of the processing fee. Loan is the processing fee. So if you're applying
That's
for,
too high.
yeah, it's too high. If you are applying for 30 lakh rupees, they will ask you 60,000 rupees as the processing fee. Now, apart from that, there is a mandatory insurance that you need to buy, which is your loan life insurance in a way, which says that if something happens to you while you are abroad, then your co-applicant don't have to pay money. It will be covered by the insurance, which is actually everybody should take that, right? You never know you are going to a country which is not very friendly to you to start with. You never know what kind of emergency can come, right? And you don't want that if anything happens to you, then your family has to repay. Your family is actually thinking that you will earn that money and repay it back. So it's mandatory to buy. So that is again comes around 1% of the loan amount usually. That is an insurance. So premium depends on the age of the co-applicant and your age and all of that. But this a lot of these lenders don't ask you to pay it upfront. They say that we will add it in the loan amount.
Even the processing fees?
No, not the processing fee, the insurance
Only the insurance.
insurance amount. Now, one thing that I actually want to sort of talk about, or give warning to the people who are watching this podcast is when you are applying to some of the NBFCs, they will try to sell you many other things. They will tell you that health insurance is also mandatory. Then they will tell you that getting the forex transaction done through us is also mandatory. And then they try to make money out of you, right? So, for example, few cases I know where somebody had to pay 3 lakh rupees upfront to get the money. So that person obviously paid 1% processing fee, 1% insurance. Then he was sold a health insurance of premium 70,000-80,000 rupees. He was sold a financial report. Just I don't know what was the logic of that, but something was charged for that. Then on the forex transaction. So let's say if I do the forex today, obviously there are solutions out there where, including Niyo, where I can pay less in the forex transaction. But these lenders, they charge 2 rupees, 3 rupees extra per dollar. Uh, if you're applying for $40,000 loan, you need to pay 1,20,000 rupees extra. So all of these loopholes are there for the students, and the students are getting exploited uh, because of all of this, and they should be wary of. In fact, we try to educate each student who comes to our universe that, okay, hey, all of this, even if you take loan through us, don't take loan through us, all of this thing, and that's why we do a lot of free education. You will see our YouTube channel. A lot of videos are about just this, that, okay, hey, just be aware that all of these things are happening. Even if you're applying for on your own, just this is the checklist you need to check box.
So, can we provide the checklist in a link with this video?
Sure. Happy to. We can provide that checklist, which are the things that you need to take care of while applying for the loan.
Great. So, concluding the process to get an unsecured education loan, there is 50 lakh limit. I think up to 1 CR is if you are going to a top-notch college.
Yeah.
Co-applicant is the most important part in your loan. If you are having good work ex or good scores, co-applicant can be bargained on, but co-applicant has to be there. These are one of the fastest. The process to apply is you go to the Niyo app, search for loans, just fill a simple form, and GyanDhan team will call you and help you with the entire loan process. You never have to visit any branch. Unlike secured loans, there is no fee on property search and this search and that search. All you need to do is keep your documents ready. If one co-applicant is not enough, you can add multiple family members to the co-applicant. And it's always good to start in advance. Right? So thanks, Aman. Thanks a lot for your time and all the amazing and important information. I hope this helps a lot of parents and students, and we'll get back with another video on more about loans.
Happy to be here. Thank you.